these trading markets can be real tricky sometimes. So the question is, how long do you actually stay into the trade? To kind of like, when do you take profit? Well, that all depends on a few things. First, it depends on your trading strategy. What strategy are you trading, right? Secondly, it depends on your trading style. I guess that would be considered strategy as well, but there is a difference between trading style and trading strategy. I'll get a little bit into that a little bit more in the video. And then it also depends on your personality, right? I guess that's the same as trading style. But your personality depends on things like your tolerance level, right? When are you, how long are you comfortable with staying in a trade, and when do you feel the need to get out of the trade? When do you feel as if you made enough profit, or when can you stomach the loss? You know, like I'll say, there always should be rules set for entry as well as exiting a trade. But when you're like a new trader, or when you're, you know, even if you've been trading for a while, we kind of like bend our rules a little bit. I'm not saying that we should, but you know, I guess it's just the way that, you know, our makeups as humans are. We, you know, and I had to come to grips with that a lot, not to try and milk a trade as much. It's always good to be profitable when it comes to trading the markets. Any financial market is always a good thing to be profitable. So I would say, like, how long you stay into a trade all depends on your trading style, trading strategy, trading your personality, and your tolerance level. You know, so let's get a little bit more into it. I want to show you guys what I mean by you know, trading style, strategy, tolerance level, and your ability to become profitable. All right. So first off, let's deal with trading strategy, right? So I am what you would call a swing trader. I trade the swings in the market, and usually my swings usually give me a 1-to-1 or 1-to-1.25 or 1.25 risk to reward ratio. And that's pretty much fine with me, because like I said, I did a video early on in my YouTube career showing how, you know, when I used to post that I traded 1-to-1s, my risk to reward ratio, I used to get a lot of flack, a lot of pushback from other traders. You know, they were telling me that, you know, that's not good. You can't be profitable that way. But I beg to differ. You can be profitable when you have a really good hit rate, or when you win a lot of your trades trading 1-to-1 risk to reward. And one of the things that I mentioned in that video was, I don't know any banks that's going to give you 100% of the money that you put into the market, right? So if you risk $200 on a trade, you know, 1-to-1 risk to reward ratio gives you back $200. And I'm sure I can hit a 1-to-1 a lot more than I can hit a 2-to-1 with the strategy that I trade on the larger time frames. So I'm a swing trader, and what I trade is the swings in the market. Let me show you guys what I mean. So if with the new level strategy, I would take an entry like right here. So here's to me what would be like a perfect entry, right here. Because it's bouncing off this major level of support, and we know if you're looking at support on the daily time frame, then this is a weekly level of support right here, right? So that would be my entry candle. That would be my signal to go long. But this right here would be my actual trading day right here, right? So that would be, let me just make sure. So that would be my signal to go long. That would be my trading day right there, right? So let me show you guys what I mean by I swing trade the market. So that would be my signal. So I would go long say if I'm going long on the 4-hour time frame. So this is the actual trade on the 4-hour time frame. So what I would do is I would go in and mark in my stop loss. My stop loss is going to be under where the move begins, right at the low of the move. So my stop loss would be somewhere around here. My entry on this trade could have been, I would say like So it depends on what price is when I'm going into the trade. If price is trading above this level when I notice the trade, then I'm going to take a limit order, a buy limit order, because I want price to pull back, put me into the trade so I can get a better risk to reward ratio, and then I can take off on the trade. If price is trading below this level, which it looks like it would have been trading below this level by the time I notice the trade, then I would take a buy stop order right here. So I'm just going to assume that I'm going to take a buy stop order right here, right? So my stop on this trade would be around 63 pip stop, and I would just go for a 63 pip risk to reward ratio right up here, right? But being a swing trader, what you want to trade is the swings in the market, right? It would be good to get all of this. It would be good to take the hold this position right here. But I have other momentum-based strategies that have put me back into this trade. But the question was, when do you know when to get out of the trade? So if you're a swing trader, you're trading the swings. So I would go here, right? I would essentially price pull back on me here. So this is the swing I would trade right here. I would trade this swing right here. Yeah, I would get out early because I always do a 1-to-1. But since I'm a swing trader, I'm trading the swings in the market. This swing is here, and then it goes down, right? So once momentum started to turn back over to go to the downside, I'm out. Swing traders, we sway swings in the market. So when I say swings, this is what I mean. Back in. Probably consider this is a swing, right? So that's what we're doing as swing traders. We're trading the swings in the market. So if you're a swing trader, you want to trade the swings, right? All right, so let's go down. Let's take the same trade. Now let's look at it from let's see what my entry was, somewhere around here. So let's look at it if we're day trading, right? So keep in mind, I'm swing trading on the 4-hour time frame, right? But if I'm day trading, if my entries on, if I'm a day trader, then I want to enter like on the 1 hour, 15-minute, 5-minute time frame. All of those time frames where if from line to line, it's the same day. It's 1 day of price action, right? So from line to line, 1 day of price action, right? So if I'm day trading a strategy and I'm entering on the daily time frame, I got to keep certain things in mind, right? So when does the market usually trend, right? Because I don't want to get into a trade and get stalled out. Because keep in mind, I'm using a different type of strategy now. Now here's where the strategy comes in, and also your trading style, right? I'm a comfortable swing trader. I like to go in, give my trades time to work itself out, give my trades time to develop, right? So my trading style, my trading strategy is a swing trading strategy, but my trading style helps me sleep good at night because I like to give my trades time to develop. I'm not a day trader. I'm not gonna always wake up at 4 a.m. and sit on the charts. It's not me, right? Some traders have that type of discipline. So here's what I'm talking about now. So if I get the same signal, this is essentially the same signal, right? But I'm trading on the 1 hour time frame and below. I'm trading on the 1 hour time frame and below. So now I'm not looking at a swing trading method. I'm looking at a trending method, right? Because I know based on day trading rules or the way the market trends, the market begins to trend at 4 a.m. 4 a.m. in the market. So, and if you're following the market maker strategy, then this right here would essentially be the breach. This will be the peak level, right? So I may not trade out of the peak. You know, the best strategy to trade if you're day trading is the what they call it, the safety trade, right? The safety trade. Safety trade. That is when you trade out of the peak formation and you actually can see which way the market wants to go, right? So this wouldn't be the day you take the trade right here. This would be the day you would start trading this market. Remember, from line to line is 1 day of price action. And you could actually employ this strategy on anything from the 1 hour and below. 1 hour and below. So if you're talking about 1 hour, 30 minute, 15 minute, 5-minute time frame, this is what you want to do. This is the strategy you probably want to use because it fits your style better as a high frequency day trader. All right. So, but keep in mind, you got to honor the stop loss, right? You have to honor the stop loss, because we know if we come out of this formation right here, price can go down and give us a double bottom right here. So in my opinion, your stop loss would be the same. That's just how I trade. Your stop loss would be the same. I would always run my stop back here, because I want to give my trade a little bit of time to develop. Now, I wouldn't take a trade at this point, because I know if I'm day trading, the market begins to trend at 4 a.m. So sometimes I have to look at the strategy a little bit different. I have to wait. Now I know this trade wants to go. I'm pretty much sure it wants to go up because of the moving averages. I should have a 200 somewhere on here. I don't know what's going on my charts, but I should have a 200 period moving average somewhere around here. Where you at? Nevertheless, let me add it because it's important. It's 200 period moving average. As you guys can see, I use them again with that indicator for my moving average. Oh, it's priced a little bit. All right, a little closer. So let me get back to where we were. So here's peak formation. You're coming out of the trade, right? And then you have your 36 period moving average. So 36 period moving average crossing over right here. So this telling you the market wants to go up because it just crossed over the 200, right? Bam. So here we go. Now the question is, where do you get into this trade? So at 4 a.m. in the morning, I'm looking for an entry. Right there, I'm looking for entry. It wasn't on this day. It was on this day after the cross of the moving average. So here's the entry, right? So I can enter the trade right here because I see momentum is starting to go back up to the upside and we're on the move. So where do I put my stop, my loss, right? If I'm day trading, I probably wouldn't put it below here because I'm not trading on this day. I will put it below this day right here, because if price is going up, until it breaks the previous day's low, it doesn't give me a reversal to the downside. So I will put my stop below the previous day's low, because I can stomach all of this pullback right here if that is the case. But until it breaks that low, right? Until it breaks this low, it doesn't tell me it wants to go down. It tells me I'm still right in the trade. I just got to chill out and then manifest a little bit, right? So I will go here. I will look for the trade to go up. That's my trading strategy as well as my trading style if I am high frequency day trading this market, right? So now if I see the setup on the 1 hour, can I go down to the lower time frame to entry? Yes, I can. And the question was entry on the 5 minute time frame. So let's take a look at the 5 minute. Let me find my spot. When you get to these lower time frames, you really have to search for the location, right? There's a lower time frame. It's a lot of bars. And keep it, as you guys may notice, I'm not showing this on the Heikin-Nashi candlesticks. I'm using traditional candlesticks, Japanese candlesticks, because on the Japanese candlesticks, unlike the Heikin-Nashi, you see price action a little bit better. So for this demonstration, I'm using the Japanese candlesticks. And this is as far back as my MT4 is going to go, right? So we'll use a different example. Let me drop back over to the 1 hour. Drop over to the 1 hour. We'll use this example right here because this is essentially doing the same thing. So price crossed over here, it's going up, right? Copy that. So let's go down to the 5 minute time. This is why I'm trading real time. There it is. All right. So when do I get in and when do I get out? So this is my 4 hour. This is 4 a.m. in the morning. Right, this is where it starts, 4 a.m. in the morning, right? So I know I want to go up. I'm gonna move this price came right down to the 200, man. It's like a perfect entry, and I want to go up. I want to go up in the market. So I would enter the trade here on the 5 minute. As it tells me, momentum is to the upside. I'm trading above, boom. So the question is also where do you enter, but where do you place your stop? Where do you validate your trade? Where do you validate that your trade wants to go up and your trade is not a dud, right? So if this is the low, this is essentially the low, right? This is all the same. It's a support and resistance is an area, guys. It's not a line, right? So this is the same, right? So if this is the same, the only thing that would tell me if that I'm wrong in the trade, if it breaks the low of the previous day. And the previous day low is right here. So for me, my stop would be right here. I would take a 24 pip stop loss to get a 1-to-1 24